mentioned, it seemed to be the case that the investors were hugging the sidelines today, really taking a cautious approach.
Kate, they certainly were, and the ASX 200 did close down around 0.3% in the end, so it was fairly disappointing, and that was despite some positive leads we did receive from overseas markets overnight. The US was mostly higher, as well as European markets, and it did seem like investors had shrugged off a lot of those concerns around the violence in Iraq, but in the US the focus was more on that stronger inflation data, and over in Europe, of course, that merger and acquisition activity which has been around. So overall, a fairly disappointing day today, but I do suspect that's ahead of that Fed meeting tonight. As expected, that energy space really was the worst performer on our market today. It did end up closing down around 1.8%. We also did see a lot of those financials coming under pressure today as well. But looking at that energy space, it really was dragged lower by Woodside Petroleum, as was to be expected. We did see Woodside closing down around 4.5%, but we also did see Oil Search as well as Santos coming under pressure. So Oil Search closed down 0.8% and Santos down around 1.3%. Some of the best performers today, in fact, was that materials space. So we did see iron ore picking up overnight, as well as nickel and copper. So Atlas Iron in particular was one of the strongest performers today, up around 7.7%, and of course Aquila Resources as well, up around 7%. And another sector that was in focus was that consumer discretionary area, which was up around 0.25%. There was a lot in focus around David Jones today. David Jones was trading relatively flat for most of the day, but it did end up closing up about 0.5%. But overall, fairly disappointing day on the market.
Yeah, focusing on the consumer discretionary stocks, one of the best performers today, you mentioned, Leanne. Do you think that means we've seen the end of the downgrades?
Kate, we know that we have recently seen a lot of downgrades coming from this sector, in particular a lot of those retail stocks. So recently the Reject Shop, Pacific Brands, Super Retail Group, as well as Flight Centre. However, this week, in fact, the discretionary retail sector has in fact performed well. It is up around 1.8% for the week so far. Last week we did in fact see that discretionary sector falling off around 1.7%. So far we have in fact recovered a lot of those losses, and I do think that a lot of investors have probably factored in now the fact that there has been some weakness in the retailers, although we potentially could see continue to see a little bit more weakness, potentially some more downgrades coming through. We do expect over the coming few months that there will still be a little bit of volatility in that discretionary trading area, but certainly coming into the fourth quarter of 2014 we do expect to continue seeing some strength again as a result of that business confidence picking up, that wealth effect remaining intact, and of course we are still seeing those high savings rates and those low interest rates as well. But I certainly think investors have started to factor in a lot of this weakness and these downgrades coming through, and as a result we are starting to see a bit more strength coming through in that discretionary area.
Let's switch lanes and take a look at Woodside today. That stock finishing down by about 3.5% at the close, actually 4.5% by the close. Sorry, it declined even further. Definitely underperforming the rest of the energy space today. Yesterday we learned that Shell was offloading a significant stake in the company to institutional investors, and then today shares came back online lower. Now this deal has been coming for some time. It was pretty well executed, so a lot of investors are wondering why we saw that weakness today.
Kate, I certainly think the information we received yesterday was positive. However, in the short term, we were expecting to see some weakness and volatility in the stock. As you said, Woodside closed down around 4.5% today. And really, I think that's a result of probably three key reasons. Firstly, today we did receive confirmation that Shell has completed the sell down of their $3.2 billion to institutional investors at a price of $41.35. And we do know that that was at a discount. So we were certainly expecting that share price to come on to the market lower today. But secondly, we also know that that 9.5% share buyback by Woodside is still due to be approved by shareholders. So there does remain a little bit of uncertainty around this at the moment, and I certainly think that investors are probably holding off on factoring in any earnings per share accretion at this stage. But thirdly, we also know that Woodside does need to have a look at their growth projects, and that is one of the key concerns. We do know that they have about $5 billion to spend, or they had previously indicated. Obviously now this $2.7 billion they've used for this buyback now leaves them with about $2.3 billion for additional acquisitions, and we do expect that their production will start to fall off by about 5% from 2016 onwards. So really we do need to hear out from the company on what they plan to do for their growth projects. But certainly this news that was received yesterday in the long term we do think was very positive. Obviously Shell selling down does mean that it frees up quite a large portion of Woodside's shares for new investors, and secondly, potentially if this buyback does go through, it will certainly optimise value for shareholders in terms of boosting earnings per share, cash flow, dividends, and of course increasing liquidity in the stock. And overall, above and beyond that, we do still remain very optimistic on the outlook for Woodside.
Front, because we learned today that it's reached a settlement with ASIC over disclosure breaches. Does this change your outlook on the stock at all? What does it mean for investors?
Kate, it certainly was an interesting one today. We did see them reaching that agreement, and they now have to pay that $1.2 million penalty. But in fact, the stock was trading higher today, and it did close up around 1.8%, so it was interesting. I do think investors are probably more focused on the long-term prospects for this company rather than backward-looking to this, in fact, news, which was out in 2013. Recently, we did see them coming through with positive announcements, firstly for their 2014 guidance as well as their 2015 outlook, which in terms of gold and their copper production as well as their all-in sustaining costs did look very positive and were in that line with our forecasts. And in fact, since we did receive that news through, the stock is up around 4.5%. So I certainly think in the short term, investors have been reacting positively to a lot of this news coming through. However, looking at the outlook, we do still remain very cautious. It has been one of the underperformers since around the middle of March. It has been down around 18% in fact, so it has actually been coming under quite a bit of pressure. But having a look at the outlook, we do think that there probably is a substantial amount of capital expenditure that still is required in order to fund those growth projects. One of our biggest concerns is around the Lihir expansion, and we know that is only half complete, and also they probably require quite a bit of additional capital for the Kapit development. So overall, we do remain fairly cautious on the outlook, and probably this news that is through today doesn't really change our outlook on the stock.